Welcome back to Squawk Box this morning. The Paycheck Protection Program was designed to rescue Main Street. According to the Small Business Administration, more than 4 million loans have been approved so far, totaling more than $500 billion. But is the money getting where it needs to go? One of the most successful private equity investors wants to make sure it does, especially when it comes to minority-owned businesses. We're joined this morning by Robert Smith. Of course, he's the founder, chairman, and CEO of Vista Equity Partners. Robert, it's great to see you this morning. Thanks for joining us.
My pleasure. Good morning.
You have worked with the White House on this PPP program, and so I just ask you to start by giving it a grade. Do you believe the money's getting where it needs to go?
You know, the first tranche of the PPP, I think, was challenged to get to the small businesses, small and medium businesses. The second tranche were being a lot more effective. But one of the things we discovered, Andrew, as you and I have discussed, is that there is frankly, banking deserts in a lot of the communities. About 70% of the African-American communities actually don't have a branch bank. And so we've been working with the Treasury, Secretary Mnuchin and Senator Schumer and Pelosi to actually work on building out capacity in what I call the capillary banking systems, which are the community development financial institutions and the minority depository institutions, and building out capacity to get these dollars into the hands of these small businesses, which are essential to our communities.
So what do those capillary banks look like? Who are you direct? If you are a small business owner this morning, listening to you this morning, where should you go to get that money then?
Sure. So there's about a little over 1,000 of these CDFIs and the MDIs. And these banks typically are in the communities. They're mainly in what we call targeted communities. Unfortunately, a lot of the larger banks don't bank those organizations or those businesses any longer. And there's about 94% or so of the African-American businesses are sole proprietorships and don't have banking relationships. And so what we've been doing is technically enabling. I've got some wonderful teams who've been enabling these businesses to interface with the E-Trans system at the SBA. And you can go to a number of places. There's nationalbankers.org. There's National Action Network, who we've been working with, Black churches, Our Fair Share, a number of organizations that we've been working with to enable these banks to be able to process the loans. And there's probably about $90 billion or so left in the second tranche of PPP. And I think it's essential that these small businesses, urban businesses, African-American and Latinx businesses get their share of this stimulus capital to really, frankly, repair some of the economic damage that this COVID virus and this sheltering at home has done to the community's economic base.
Do you think the PPP program needs to be extended and more money needs to get into it? The Senate tried to pass a bill that would have extended the deadline from June 30th, as you know, to the end of this year.
I think two things. One, I think we need to think about this holistically, and how do we not only just repair the economic, but really restore the economic opportunity that we were on the path of capturing. And I think part of that is more capital needs to be driven, frankly, into the small businesses' hands, and probably give them a little more flexibility in terms of how they spend it. It shouldn't necessarily just be 75% for payroll and 25% for rent and utilities. I think should be some more flexibility. And the vast majority of these small businesses, their loans typically need to be in the $50,000 or $75,000 range, right, not $2 million. So I think it needs to be extended. I think there needs to be carve-outs specifically for banks under $1 billion in assets under management. That's where these capillary banks fit, where they have more time to process the loans, because it takes some time to actually process the loans for these small businesses.
Robert, maybe a sensitive question, but how do we incentivize workers to go back to work and to do it safely? And the reason I ask is we've had a number of guests on the show over the past week or two from Washington, often on the Republican side, who say, especially among low-wage workers, that some of the unemployment insurance programs in this country effectively are paying them more to stay at home.
I understand.
And we wanted that to some degree during COVID. But it becomes complicated now.
I think it's important, Andrew, that two things. We need to make sure it's safe for workers to return to work. And I know there's a lot of scientists, and we work in a number of commissions at the state and federal level to help think about pathways to get back to work safely. But from that side, I think most Americans do want to work. They want to get back engaged in the commerce and business and trade that they're engaged with. And I think the important part of that is make sure that we have a very robust set of businesses for them to go in and provide their duties and their efforts. So I think it's important that we really, frankly, re-stimulate the economy and actually, frankly, invest in the technology that will make our businesses more efficient. I don't want to necessarily waste this crisis by not investing in technology in our banking system and ensuring that every American and every American business has access to a robust banking system. And frankly, every business has the ability to leverage newer technology so they can grow more effectively and can continue to increase the wages and opportunity for their employees. That's the best way for us, frankly, to entice folks back to work.
Robert, let me ask you a question as a business question, as an investor in this world right now. Clearly, the market is anticipating a V-shaped recovery. Are you anticipating the same kind of recovery?
The world I live in, as you know, Andrew, is software. And I think what has happened is, the digital world has been pulled forward in everyone's life at this point. In certain segments of the economy, I think we will see, a more rapid recovery in areas that I'm in particular. And other areas, I think it's going to take some time. I think we're going to have to relearn how we engage in certain environments, which require social, for some period of time, some social dynamics of space that we hadn't, contemplated before. So I think our retail markets are actually going to change quite dramatically in terms of how we buy goods and services. And I think that we're all going to embrace more effective ways of engaging, utilizing, in my case, software and technology to move business along. And there's probably going to be a reshaping of the supply chain across multiple industries. And that's going to take some retooling and some effort. And it's just going to be a question of how long that takes for that to actually manifest.
But when you look at valuations today, and of course, they're pegged off of, you're buying private companies, but they're pegged off of a public market. Do you say, these prices make sense to me? These prices are too high, they're too low?
What we see is, and you and I chatted about this a few months ago. I mean, that prior to COVID, we had just massive amounts of liquidity in our markets generally. And I think as people started to realize that certain industries are getting harder than others in this context, that there's going to be a rotation to areas I think are less affected. So we've seen segments and sectors in our space, for instance, where the valuations, they took a short-term drop and then now are kind of reaccelerating back to the normal or to the rates that they were before. There's an argument that, again, as digital consumption increases, that some of that's justified. And there's an argument that is frankly overbought too quickly.
Right. We are about a year. It's been about a year. It's your year anniversary when you surprised the 2019 Morehouse College class that you were going to pay off their entire student debt. It was quite a remarkable moment that I think everybody in the country saw, and we applaud you for doing it. I'm curious what you think now, though, about higher education, the cost of higher education. A lot of parents, by the way, and students thinking about whether they should be paying for a virtual education, some of which may be happening in the fall. What do you think of all of that?
Yeah, I think it is, again, brought to the forefront that we're going to have to rethink education. We've been talking about this for years. What is the value of a four-year degree versus maybe going in different forms of work study and apprenticeship programs, et cetera. As you know, we've expanded our programming for our Intern X programs, et cetera, really focused on STEM education. And I think the dynamic is we will see that since most of our students are now actually, learning from home or learning at a distance, leveraging technology to do that most effectively is going to be one of the critical parts. And I think there's going to be a reshaping and frankly, a readjustment of our educational dynamic. In all frankness, I think some of that's warranted. And I think we should think about what are the most effective ways for us to educate our population to drive forward into the future of opportunity. And a lot of it is digital and STEM oriented. And there's real questions around how much value do you get being in the university? There is a lot, I will tell you. I benefited from it myself. But there's certain types of call it vocations where you can frankly just learn them in coding camps, et cetera, and move forward from that direction.